It's a bear. Good morning. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in absolutely lovely Lauderdale by the Sea. If this is first time watching my videos here, I am a local brick and mortar store here in South Florida. In fact, I am right here. This is a live cam of our local Lauderdale by the Sea pier here in our beach. And if you just follow my hand and you walk straight down this way, right from the pier, have a beer on the way, pier, about 2 or 3 blocks, you will hit my store on the right-hand side. I've been in this location since 1995, and I've been a precious metals and rare coin dealer and other things since 1977. Now that I got that intro out of the way, beautiful day out there. I think I'm going to try to get some fishing in tomorrow if it's nice enough. Meanwhile, I hope you have a wonderful weekend as well. Let's X out of here and go into what we're going to talk about today. Well, first, I'm going to talk about stagflation. I'm going to talk about the game being rigged. Of course, my thumbnails here. Which I may or may not use. But let's first talk about spot prices here before I get tongue-tied, which I started to. Sorry about that. And remember, I do these things live straight through. I don't even edit them, so if I screw up, forgive me. And let's take a look at spot prices. Last night, man, I was a little concerned. I mean, we saw monkey hammering happening last night to the nth degree. 1857 was the low. 1896. You know, I really thought it was going to be a monkey hammy. I'm going to see what I tell you. A monkey hammer Friday. I kind of was expecting a monkey hammer Friday, but surprisingly, it's kind of recovered quite well. Same thing with silver. Silver got the crap kicked out of it yesterday, but you know what? I don't worry about that. Neither should you, and if you've been watching my videos, you didn't worry a bit because if you had money, it provided you an opportunity to buy more. If you didn't have money, you're holding, or what do they call it in cryptos? A hodl or something? You're hodling, or whatever that is. So range is 1857, 1896, 20 is the high today, 1894, 50 being where we're sitting at the moment right now. I just refreshed that a few moments ago too. And I'll do a quick refresh just for the heck of it. Let's take a look here. 1895, up a penny since I last refreshed. Silver. Like I said, last night, I saw 27.15 as a low. We had 28.15 as a high not too long ago, so we pretty much blew through that really quick. It didn't stay there that long. We're currently sitting at 27.83, so the overnight markets, again, I saw a low at 27.15. I thought for sure we were going to have a low day and a good opportunity to buy the dip today, but apparently not. This dip happened overnight when everybody in the United States is pretty much closed. Although we did have a nice little dip yesterday and a good buying opportunity, but last night it even kind of dipped a little bit further. But again, we're recovered today. Let's see what happens. Probably has something to do with not good economic data, and the dollar was probably weaker as well today or overnight. So this is probably a result of what we're seeing, those little bullshit moves. Platinum 1167.80 right now. Look at that range too, 1143.48 to 1169. I'd love to have been able to buy platinum at 1143. That's a really good buy, I think. No less, anything below 1200, anything below 30, and anything below 2000, in my opinion, is a great buy, no matter if you buy it, you know, again, good buys out there. What I'm noticing, though, with gold is that with gold at 1895, 1900, now with the premiums now, even with the gold bars, you're going to start paying with premiums. You're looking at that $2,000 an ounce mark right now. So, but that's a good thing. Prices are overall up, and again, I think we're going to see some more monkey hammering. And as I said in yesterday's video, we'll probably see the market get the crap, gold and silver get the living crap kicked out of it when we see another 2008 crisis come along, because it happened then, it'll happen again. But again, nothing to panic about. If you can buy that dip, buy it, because it won't last long. Let's move into today's articles. And here's something I wanted to talk about. Of course, the game is rigged, and you've heard me say this 1,000 times. Because why I'm saying this is because of the next article we're getting into. Of course, the game is rigged. Don't let that stop you. If you don't play, you can't win. This is one of my favorite sayings out there, especially when it applies to markets, especially the gold and silver markets. But you could apply this to any market, currency markets, equity markets, crypto markets. And I've been saying this for a long time. Most all these markets are rigged, and that discourages some people. But you know what? You can never get ahead if you don't play the game. So the importance is to know how to play the game. I mean, think about the great card players out there, the top poker players out there. The game is kind of rigged against them a little bit, but the more they learn how the game is played, and the more they learn, the players around them, who the players are, how the game is rigged, how the game, and that there is some luck involved with it as well. They do well. They do well, and that's exactly what you need to do. Is you need to realize that the game is rigged. Don't get discouraged. All games are rigged. A lot of things are rigged in life. Some people even believe elections are rigged. We'll see. But no less, of course the game is rigged. Don't let that stop you. If you don't play, you can't win. And that's true almost in every market. Let's take a look at gata.org. Again, one of the reasons I brought up that little statement is because gata.org, I don't get paid by them, I don't get a free subscription or anything. I just really heavily believe that if you are a gold and silver stacker and you want to know how the game is rigged and how the game is played and who the players are, this is a wonderful, fantastic website. This would beat Bloomberg, Wall Street Journal, CNBC, all those Forbes. If you combine them all together and compare them to this site, they don't even stack up. In fact, you know my opinion on corporate media when it comes to gold and silver and precious metals. If you listen to corporate media, you're likely going to go broke. Now, I can't say that's true with equities and other things, but when it comes to gold, silver, and precious metals, corporate media, Wall Street Journal, Bloomberg, Forbes, CNBC, they're freaking clueless. Don't ever listen to those people when it comes to precious metals, folks. Trust me on that. Again, great site to have, gata.org. This should be bookmarked. And for you folks that have been listening to me for a year, you're probably sick of hearing me say this, but let me add that if you have friends that are stackers, you should be turning them onto this site as well. Ronan Manley, central banks operate in stealth, the heart of London gold market. Basically, he's just saying that they do it right out in the open. The rigging is pretty open. Everybody knows what's going on. But and the purpose of the London gold market is to conceal everything important that happens in it, so to facilitate the surreptitious control sorry about that, of the gold price by central banks using imaginary gold. Now, we've been talking about this for a year, but the game is up for them. The game, it's pretty much over, my understanding, with this Basel III thing going on. But as we've asked before, why now? That's the big question. What's going on? We went into that this week. I'm not going to beat that horse right here. Again, we've done this video. We've done this on our videos quite a bit in the last couple of weeks, talking about the London gold market, the manipulation, and everything goes on. Today's video, I just kind of want to point out to you that don't get discouraged when you see these down prices. We are in a full-blown good bull market. So when you see these down, just buy the friggin' dips, and if you don't have the opportunity to buy the dips, just sit there and hold them. As I said yesterday, you will never wake up in the morning and heard that gold and silver went bankrupt. It's never going to happen. Now, if you have someone holding your gold and silver for you, that's a possibility that they can go bankrupt or someone they're with go bankrupt. And this is the reason that I say that when you're buying physical gold and silver, you do not want anyone to hold it for you, no matter how good they are, no matter how well-intentioned they are. If something happens to them, you'll lose it all. So trust me on this one. I know about third-party risk. I did a video one time about it too. I had a big issue with it. But again, I don't want to digress and make this into a 2-hour video. Let's move along to what else was on here? Not too much. Oh, hold on. I actually did click this article because I wanted to read it. It's by Ronan Manley, and actually, central banks operating stealth at the heart of London. Now I know why I clicked that, because I did indeed, oh, come on, where is it? I liked some of the memes. Secrecy in the London gold market. The London gold market is surrounded by secrecy, and it's getting worse. No trade reporting, no data on outstanding gold deposits and loans, no data on allocated, unallocated accounts, no data on physical shipment, no clarity on central bank gold vaulted at the Bank of England, no data on what, if anything, is backing the fractionally reserved unallocated gold trading. And again, maybe that's why this whole thing is ending with the Basel III agreement or the Basel III rules. Perhaps that the big bankers out there, BIS, is afraid that LNBA and COMEX is going to go down and take them down with them. And of course that can't happen. But there's so many speculations. We talked about Putin as well, supposed to making that big announcement last April. No announcement came. Maybe he, China and Russia have been backing their reserves with tons of gold. They're de-dollarizing, if that's the proper word to use. So I think Putin was kind of forcing their hands with this Basel III thing, that they've got to stop the fake derivatives, the fake paper market. Again, I digress. Really good article. You should read this. It is lengthy. However, if you want to know what's going on and what's been going on, very well done article. Excuse me, I want to get a quick sip of coffee here. And as I said, don't get discouraged. If you're new to this market, all games are rigged, but this is one of the hardest ones for them to rig in the long-term physical markets, in my opinion. And let's move along to ZH here real quick and see if there's any articles. Not too much, just kind of newsy stuff. Of course, I'm getting so tired of this stuff right here, but you know, it is what it is. This is interesting. United Airlines orders $3 billion worth of supersonic airplanes. Well, apparently United Airlines sees a future in this country and in this world because they're spending big bucks. So that's a good sign overall. Not too much in precious metals here. Stagflation. This was a article that got me thinking about stagflation and what is stagflation and where we're going. Where is it? Hang on, maybe I already clicked that article. 1 second here. Let's see. Yeah, I did. There it is right there. The interesting part of this article about stagflation, and if you're not familiar with stagflation is, I did this right here. Let me take a look here. And I highlighted something very interesting here. Stagflation is characterized by slow economic growth and relatively high unemployment. Basically what we've got going on here. I mean, here's a classic stagflation is what we've got going on. We've got an economy that took a crap 2020, unemployment at record, all-time record levels. The economy is kind of really terrible, and which is at the same time accompanied by rising prices is what we're starting to see now. Stagflation can also be alternatively defined as a period of inflation combined with a decline in gross domestic product. Well, if we've had any clear signs of that, I mean, this is it, man. Key takeaways. Stagflation refers to an economy that has experienced a simultaneous increase in inflation and stagnation of an economic input. Well, I'd say that pretty much explains it well. Stagflation was first recognized during the 1970s, where many developed economies experienced rapid inflation and high unemployment as a result of oil shock. Prevailing economy theory at the time could not easily explain how stagflation occurs, and since the 1970s, rising prices levels during periods of slow or negative economic growth have become somewhat of the norm rather than an exceptional situation. So basically, and again, I am a big fan of Investopedia. Whenever you come across terms that you don't understand or fully understand, whether you know in economics or in whatever it is, when you're reading something and you're not fully, you don't know exactly what stagflation means, or other words in the economic world, definitely go to Investopedia and type it in, and don't gloss over it. You know, because for you to read an article or read things that other people are writing that are explaining, you know, who the players are, what to do, you need to know all these words. So you need to know exactly what stagflation is if the writers that you really respect and read are telling you that stagflation is here. And I went long-winded to tell you why I love Investopedia. Sorry about that. Interesting article down here too. People wondering what causes stagflation. I mean, and there's a lot of different theories on the cause of stagflation. I'm going to kind of read this real quick for you. Because the historical onset of stagflation represents the great failure of the dominant economic theories of the time, economists since then have put forth several arguments as how stagflation occurs, or how to redefine the terms of existing theories in order to explain it. One theory states that this economic phenomenon is caused when a sudden increase in cost of oil. So basically what they're talking about is oil prices would be one of the causes of stagflation. I don't entirely agree that, and I think the reason they believe that is because we had major stagflation in the 1970s. I'm going to get to the reason why I think that we're going to see, or why we have stagflation. And another theory is that the confluence of stagnation and inflation are a result of poorly made economic policy. Well, I think you could definitely say that that is the case here. Whether it's for this reason up here or the reason I'm going to get to in a moment, just poorly made economic policy. And we see that every day. Our politicians worldwide, not just the United States, worldwide, our politicians and the people that lead these economies have just completely screwed it up over and over. Again, don't want to get into that, don't want to sound negative. Let's read here a little bit. Some point fingers to the policies set in place by former President Richard Nixon, which may have led to the recession of 1970, possibly a precursor of the period of stagflation. Nixon put tariffs on imports and froze wages and prices for 90 days in an effort to prevent prices from rising. Oh, yeah, I didn't even realize that. I was pretty young at the time, but I didn't know. One thing I didn't know is Nixon did froze wages and prices for 90 days. That I didn't even know a president could do. Interesting. So you learn something new every day, folks. I just did. The sudden economic shock for oil shortages and rapid acceleration of prices once the controls were relaxed led to economic chaos. Well, here, this particular explanation is blaming the president, President Nixon, and him putting tariffs on imports. Now, I'm sure that this is probably true. Absolutely, politicians can take a bad situation and make it even worse under the guise that they're helping you. But I think this is really the answer to stagflation and why we've seen stagflation since the 70s and why we're going to continue to see it. Stagflation and the gold standard. Other theories point to monetary factors that may also play a role of stagflation. Nixon removed the last indirect vestiges of the gold standard and brought down the Bretton Woods system of international finance. Now, here's a subject that we talk about all the time. Now, this is exactly why I believe that this country is in trouble and will continue to be in trouble, and why our currency is in trouble and will continue to get worse and worse and worse. It's a fiat situation, folks. This removed commodity backing for the currency and put the U.S. dollar and most other world currencies on a fiat basis ever since then. Well, of course, we know that. Nixon took us off the gold standard in 1972. Basically, that was the end of the Bretton Woods Agreement. We've read that many times. Funny how this all ties in with everything, isn't it? Anyway, ending most practical constraint on the monetary expansion and currency devaluation as support for their theories, proponents of monetary explanations of stagflation point to this event, as well as historical record of simultaneously inflation and unemployment in fiat money-based economies, and the countervailing historical record of extended periods of simultaneously decreasing prices and low unemployment under strong commodity-backed systems. This would suggest that under an unbacked fiat monetary systems in place since the 1970s, we should actually expect to see inflation persist during periods of economic stagnation, as indeed has been the case. So really, this comes down to, my opinion, is what we have talked about for the last year on these videos is the fiat currency, removing the gold standard, and the endless printing of dollars. This is the exact reason that you don't have to worry ever about gold and silver going down in price for any length of time because of this right here. We are God, they're just endlessly printing, folks, and that's just going to sink the dollar ship at some point. And what do you put your money into? Where do you put your money? Equities markets, which are just like blowing through the roof right now. Cryptos, which are like going to Las Vegas. What is the surest bet out there? It's gold and silver. That's my opinion. Anyway, really good thing to read here. If you get a chance, and read this whole thing, Investopedia. Go to Investopedia and type in stagflation. I think this will make you smarter than the average bear, and really that's what it takes to make money, is just to being a little smarter than the average bear. And I can show you how to do that with my markets, the markets that I'm familiar with. Let's take a look at yesterday's video, Be Greedy, Buy the Dip. And of course, that was based on a saying by Warren Buffett, or a quote from Warren Buffett, which I really liked and I quoted yesterday. If you get a chance, watch that video. It was pretty cool. And also, while I'm here, if you would, hit that like button. I really appreciate it. And share if you can. And the subscribe button, that little bell, is always nice to see too. Let's take a look at comments from yesterday's video, and newest first. Let's see here, and I'll go down to the oldest first. Oh, lots of comments, man. I'm not going to get through them all today. Azure Blue says, thank you for your video. You mentioned the financial collapse of 2008. Can you please tell us, excuse me one second, what the premiums were for gold, silver, and platinum in 2008 and or 2000? Absolutely. This is kind of interesting because I really didn't delve into that too much. In 2008, during the financial collapse, you know, when you woke up in the morning and the whole system was just falling apart, and the politicians now were screaming that this was the end, we were going to be like a Mad Max world, that it was over. Well, gold, almost in an overnight fashion, gold was in a bull market, a continuing bull market, kind of like what we're in right now, exactly, all right? Similar, very similar circumstances. Gold was in a bull market, was doing very well, had made its march up from 300, 400, 500. We were up to $1,250, which was, you know, that was a high. That was an all-time high for gold. We were in all-time high territory. 2008 collapse, boom, gold shot down to about $850. The paper price of gold did. And silver, I forget where silver went, but silver was, man, I want to say Silver was 15, 17 or something like that. It went down to $9. Maybe it was even higher. I forget, to be honest with you. But silver went down just as much, 30, 40%. But you asked me what the premiums were during the collapse. First off, during that week of the collapse, when gold went to $12.50, and silver was the same thing, so I'm not going to talk about silver, but gold went from $12.50 to $800.50, $850 or so, a huge drop. All of a sudden, I had customers calling me, "Can I buy gold? Can I buy gold?" So I'm calling that in the morning, and I'm calling those days, and all my distributors, we have nothing right now. We're completely sold out, and they were completely sold out. I was sold out of most of my stuff. We were basically premiums on gold eagles. When gold was $850 an ounce in 2008 during the collapse, premiums on gold eagles were as high as they are right now, $200 per ounce. I saw premiums on silver eagles. Now remember, silver was probably $9, $10 an ounce when it hit the low into during the crisis, but you couldn't buy it for that. You couldn't find it anywhere. And if you found silver eagles, they were going to run you spot plus $7 or more, and delayed delivery. It could take 2 or 3 months to get them. I think even generic stuff went up as high as $5 to $7 an ounce premium is what dealers were paying just to get it. And again, prepayment, when I was ordering some 1 ounce, when the prices came down a little bit, and I started to order 1 ounce rounds, 10 ounce bars, and 100 ounce bars for store stock, I was being told that delivery is going to be 3 weeks, 4 weeks, 6 weeks out, even 3 months. So there's some very similar things going on right now in this market. But again, premiums were super high during that collapse. And gold, coincidentally, went up substantially, even though the market did not follow that quickly. It took the stock market, equity market, and the housing market almost a decade to get back up to where it was. And gold and silver quickly rebounded from that low. So if we see another financial collapse here coming up with the equities markets, housing market, whatever bubble it is, and gold and silver get taken down with it, it won't last long, folks. And premiums will go super stupid. You think they're stupid now, they'll go super stupider. And again, but it won't last long. If you just wait it out, the price of gold and silver will increase a lot faster than the other markets. Good place to be in that kind of times. Stacking coins, bear. Yeah, the coin said bear today too. Yesterday it said bear, although the markets were up a little bit, but I guess in the evening it was down. So it's been a bear week. Last week or the 2 weeks before, that coin was saying bull every day. I'm beginning to wonder if someone's messing with my coin. Where is it? There it is right there. Thanks for watching. Ed Moore says, yep, happens every time I make a big purchase. Ed, I know what you're talking about. Every time I go out to buy store stock, I'm sitting there looking at the screen, and it's going up pennies, it's going down pennies, and I say, well, you know what? When I got stuff I need to sell, have to sell to liquidate and get more money for the store to buy more stuff, I'm in the same situation sometimes. I'll be looking at silver, it'll be like 27.80, and I'll say, well, let me wait, see if it jumps up another 20 cents, and then it'll start to go down 27.68, 27.65, and then finally I just capitulate. I don't have the for me, I have to trade this stuff. I can't wait the next day. But for people that can just wait and hold, or what the crypto guys like to say, hodls, if you can hodl precious metals, man, you're going to be a pure winner. Thanks for watching, Eric. Justin Evans says, I never panic on price drops, and neither do I. Thanks for watching, Justin. I really appreciate it. 20 years of buying silver. Good for you, sir. Douglas Jones says, buy the dip. What dip? Yes, gold went down, but breaking all news. All dealers raise their premiums where you never get a real dip. That is not true, sir. I guess there are some dealers, and I guess you're just dealing with the rotten ones, sir. But Douglas, I don't raise my premiums when I only raise my premiums if it costs me more to buy it. And usually, I got to tell you one thing about the precious metals market. It is a true supply and demand market. You don't have that manipulation like a lot of you think you do. A lot of people think, well, dealers just raise a premium because, no, not necessarily true. Now, smaller guys that they're in their inventory at a much higher cost may choose to raise their premium. But the problem when you, as a dealer, if you raise your premium, the online guys don't raise their premiums generally. A lot of guys don't raise their premiums. And like myself, I just suck it up and say, listen, I'm here to buy and sell. Occasionally, it's going to get me a little bit, but no, so I don't. So, for example, if the price of silver drops $1 or $2 an ounce, but my replacement cost is still $4 an ounce over spot, I'm not raising it to $5. I'm just going to replace it at a lower level at the current. So basically, we're all working on supply and demand here. So no, all dealers do not raise their premiums when you get dips. Thanks for watching, Doug. I really appreciate it. Hope you live local, because if you do, you can come by and see me and find out that's not true. Rick Blick says, it looks like silver's going down with Bitcoin. Silver is not scarce, fake news. Rick, I don't know what to tell you, sir. The only losses are silver. Here we go, and wait another 15 years to break even. No, Rick, you're not going to wait 15 years to break even. If you listen to me, you'll make money on this. If you listen to yourself, based on what you're saying here, I don't think you're going to make any money at all, sir. So definitely don't get discouraged, Rick. And you're not going to wait 15 years for sure. And let's see, that's what else we got going on. Zipson says, or get the dips to buy. LOL. Absolutely. Thanks for watching, Zip. Jeff loves the channel. Thanks, Jeff. Appreciate you watching. Hey, Mark, what's going on? New jobs report said jobless claims lowest in months, plus more new jobs created, and dollar rose against other currencies. However, it didn't stay up long, did it, Mark? That was kind of a weird day yesterday and today. Gold and silver markets are back up again. Thanks for watching Dead Man Talking. I really appreciate it. You're buying from your local shops in Tampa to teach my girlfriend what real money is. All her money is in stocks. I see the inevitable, so I cashed out. That's good. You know, it's nice that you're teaching other people that kind of thing. That's my whole point here. Even though I know that I'm not going to ever do business with you, Dead Man Talking, I have no qualms, and in fact, I kind of feel good about helping people that live outside my area. Again, my whole point of these videos is to create a bigger local presence for myself, have my local customers watch these videos, learn from them, and when they come in, they're actually going to spend less time here, less time with me, because they're smarter buyers. Again, the more they know, the less time they'll spend asking me questions. I know that sounds weird, but I do have a profit motive for doing these videos, and it's to make money locally. I don't sell online. I don't sell on the internet. But if people outside, and I always say this, if people in another state are watching me, I feel good that I'm able to help you. And again, as I say, buy local. Thanks for watching Dead Man Talking. Douglas Jones says, don't know where you to buy, but top online prices storage premiums are high. And when metals go down, premiums go up, so that they don't lose money. It's a business to them. That is true, Doug. Oh, God, I just said Doug again. You said something. You said that earlier. I'm just being redundant, Doug. Premiums, dealers only raise their buy and sell premiums when they need product. And actually, I'm going to read you something, Doug, real quick here. As of today, the wholesale buy price for 1 ounce Silver Eagles, I'm going to give you a range here. This is what dealers are paying for Silver Eagles. So are they raising their, well, first let's take a look at what dealers are paying. Dealers are paying between $7 and $9 over spot to buy Silver Eagles. Now, if you're like me, I make $1 an ounce above that. So if I'm paying 7, I'm charging you 8. If I'm paying 9, I'm charging you 10 over. And that's how a lot of good dealers, and I think that's how some of the online guys do it as well. So, boy. Yep, buy it this morning is noise. Buy the dip, absolutely. Thanks for watching, Aaron. Peace and grace. The repo market is a complete disaster again. Boy, that gets into real technical stuff there, peace and grace. But I agree with you 100%. I think the repo market's about to blow up big, and that's going to be a very positive thing for gold and silver markets. Probably not a good thing if we see an economic collapse as a result of it to a lot of people that don't hold gold and silver. Anyway, thanks for watching, and I appreciate you bringing that up. Thanks for watching, Melody. JM has a half-ounce round of gold on sale at a decent price. That's kind of cool. Again, I advertise to beat JM, SD, and APMEX bullion. I advertise to beat their prices here locally because the reason I do that is when I've been doing business for years here. I've been in this location since 1995, and I started quoting gold and silver prices to people that are coming in, mostly younger folks. And all of a sudden, I see them take a look at their phone, and they say, "Well, sir, I appreciate it." I mean, I was always pretty competitive, but I didn't know what other guys online were selling for. So they would start saying, "But APMEX has it for this, or SD has it for that, and JM has it for that." And I'm a competitive guy, but of course I wouldn't know that. So when I had these young guys coming in looking at their phones every time I quote them a price, and it wasn't every time, too. A lot of times they just bought from me because I was already cheaper than those guys. But I started noticing they go to their phone and say, "Who are you looking at?" JM, SD, APMEX. I like to use the big guys there because they're reputable and they've been around for a while. So I realized I had to be competitive against them. And I think if any local coin guys out there are listening to me and you own a coin store, you need to be as well. You need to be as competitive as the online guys locally. You'll get more business from it. And even if you make a tiny bit less, again, you'll get more local business from it. Keep that money local. That's my whole point. Linda says, "I love monkey hammering. I get to buy a little more silver." I agree with you as all. Hey, Z, what's up? I'm going to spin through a few of these, and I do apologize. Celtic Knot says, "Could be the last big dip before the shit hits the fan on the 28th, Basel III rollout. I am really curious on June 28th. I don't think it's going to be the overnight thing, Celtic Knot. I think the Basel III thing is going to take over, take place a little bit over time, as it will start to see the results of that. But who knows? We'll see. I kind of be curious to see what happens, like you are. Having my coffee now, Michael. Thanks. Hang on a second. I need to reheat that. A little cool. Tyler Murphy says, don't stop using words simply because one person is offended. It's funny. I do take to heart to what people say in comments. I don't get hurt. I don't lose sleep over it, and I don't like walk around angry and kicking the cat or anything like that. But my goal here again is to give good, pertinent information. And when I see people make some comments that are just idiotic out there, or I guess there's not much I can do about it, but I do want to please people, like most of us. I want to please people and give you guys good information, good data, and so you know what? I'm not going to stop using words because one person is offended. But if you all get offended, let me know. I'll stop using it. Silversmith says donkey punching has a nice ring to it. That's opposed to monkey hammering, donkey punching, monkey hammering, donkey punching. I guess I'll have to think about that more, Silversmith. Thanks for watching, sir. Battleborn says good things to come. Glad I've been buying these dips. Same, I agree with you. Chris Dutcher seems to be a new viewer, and I really appreciate you watching, sir. Dumbass politicians is 99.9% of a politician. Sir, I couldn't agree with you more on that. So, again, thanks for watching. Lewis Stacy says monkey hammering is the perfect word. I agree with you. I've been using it for a long time, but if I think of something better, like I said, I'll come up with something better. I'll use it. Master Sensei says debt cloth shows now dollar silver ratio at 3,800. Who remembers 5,000 last month? Kind of interesting. It's been a while since I looked at the debt cloth and the silver ratio. So no, I didn't know it had changed that much, sir. Again, thanks for watching, Master Sensei. Sensei, yes. Lewis Stacy says monkey hammer is perfect word. I agree. You need to clean your fish tank. That's actually the live Deerfield cam yesterday. It wasn't a fish tank. I wish I had a fish tank that cool. Thanks for watching, CDM. And Bill Granger says agreed. Dollars saved, they add up. You can buy more ounces. And of course, that's in reference to me talking about trading your silver eagles for the ridiculous premiums they're bringing right now and turning that into generic 1 ounce silvers. I think you can still take, if you find a good local dealer that'll do the trade for you, and he'll make $1 an ounce on the trade, that you can take silver eagles and convert them into 1 ounce, 10 ounce generics. So you can take your 100 silver eagles and come back with 107 generic 1 ounce rounds. And again, as Bill says here, the dollars that you saved, you can buy more silver, or actually buying more silver with it instead of paying a premium for it. Thanks for watching, Bill. I really appreciate it. Oh, and there's the cam. There's my fish tank. Man, I wish I had a fish tank like that. Take a look at that. That's pretty cool. Well, best deals out there still are, I'm going to just tell you not to pay more than this price and not to pay more than this price. Ready? On gold, I said that twice. On gold, you should not be paying more than $100 an ounce premium on any products. So that really pretty much takes gold eagles, maple leafs, and other things out of the equation here. Unless you can luckily find them and make sure they're real, and be paying less than $100 an ounce. In fact, I would prefer my customers be paying no more than $85 per ounce for any gold products as a premium, because those type of products exist, and I do have them in stock. So anything over $85 an ounce premium, in my mind, is too much money. And I talked about a couple of things about gold yesterday. I think there's some good deals. If you're down to buying fractional gold, stay the hell away from fractional gold eagles, fractional maple leafs, unless you can buy them from someone that's not familiar with the price structure and sells them to you too cheap. And again, if they don't know the price structure, then they may not even know if they're real or not. So I'd probably avoid that. Best deals out there in fractional gold are French 20 francs, Swiss 20 francs, gold sovereigns, Austrian 1 ducats, Austrian 4 ducats, any of the foreign gold products out there you can get at fairly reasonable deals right now. And again, way cheaper than what you can buy 10-gram bars for, 5-gram bars for, 10th ounce eagles, 10th ounce maples. So my recommendation is, if you're looking for fractional gold, stick with the foreign gold that's available out there. There's millions and millions of these coins out there available for sale at your local coin stores. And try not to pay more than $40 over melt for any of those products, any of those fractional products. When it gets over that, just avoid them, in my opinion. As far as silver goes, best deals out there. I want my customers paying between $4 and $5 an ounce premium, no more than that. Although, you know, if you want silver maples, I do have them cheaper than anyone else has got them online. I've got silver maples for spot plus $6. I think Atmex and the other guys are at spot plus $6.25, spot plus $6.50. But I still rather see you just buy the other products that I have are in that $4 to $5 range. But if you have to buy coins, I do have them for $6. Over that six. You know, and I can still be competitive at 6 1/4, make $1 an ounce. I'm only making 75 cents an ounce over my replacement cost on these maple leaves, but I really want to stay under that $6 range that I've been advising my customers to stay under. I'm not comfortable with it, so I'm trying to keep my price at $6 or less. Again, if you ask me if there's cheaper products than maple leaves, I'll tell you right out, yeah, I think you should be buying these particular products. And if you come into my store, I'll point out which ones they are, between $4 and $5 an ounce premium. Again, if you're paying over $6 an ounce premium, you're paying too much. There's other better products out there. Wow, that's about it. And as you know, I always like to end this with keep it local, man. Buy locals. Go to your local coin store. Again, I'm a brick and mortar store in South Florida. If you don't live in South Florida, you can't deal with me, unfortunately, unless you want to drive down here or fly down here, and I wouldn't recommend that. So my recommendations for people that live outside my area, keep it local, man. Stay in your town. Stay in your little city here. If you can't find a good local bullion and coin dealer in your local city, take a little drive into the county a little bit further. Nobody in the county, go into the state. You know, take an hour or so drive, man. Keep that money in your state at the very least. And hey, I may make another recommendation if I could too. And a lot of local coin stores and local dealers may not want to hear this, but I'm cool with it because I'm very competitive in my area. But hit more than one, you know, have more than one local coin dealer because, for example, like with me down here, what happens if, you know, a meteorite landed on me, I got in a car accident or something, who else would you go to? So try to have yourself a couple good dealers that you can have on hand, and you can always bounce stuff between them as well. And if you're buying online only and you don't have local dealers and you bought all your stuff online from reputable dealers, again, I advertise to be Atmex, JM Bullion, SD Bullion. At my store, I'll beat their prices on anything locally. If you can buy local, keep that money local. And where was I going with that? Gosh darn. Oh my gosh, I think I needed another cup of coffee before I started the show. No less, I'm going to finish it up right here and call it a day. Or a weekend, I guess. Well, this is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Call me anytime at 954-493-8811 between the hours of 10 and 4, Mondays through Fridays. Happy to help you out with the best deal of the day or any other questions you may have. And that's it, I guess, folks. Have yourself a beautiful weekend. Stay safe, and I'll talk to you on Monday. Bye now.